It's time now for Echols at 8 with Michael Echols. Michael tackles topics that affect your family and community, such as the state of healthcare, health and wellness, as well as what's happening in Washington today. And now, Echols at 8 with your host, Michael Echols.
Folks, we're back. You're tuned in live to Echols at 8 as we bring the latest on business, politics, healthcare, and a whole bunch more this morning. On the show, if you've got questions, you can give us a call, 800-259-1440. Remember, you can also listen to us live each and every week at KMLB.com on the Listen Live app. And if you miss out and you just are desperately wanting to hear what all we talked about, well, then you can go to Spotify after the show. Type in the KMLB link app, and, of course, you can pull our show down. We don't want you to miss out on a single thing here, folks. It's such a big deal that you know all the great things happening in Louisiana. Speaking of great things happening in Louisiana, one great thing was the young man on our show is the president of the Louisiana Oil and Gas Association, a USL graduate. Now he claims to be from ULL with a bachelor's in business administration. I got to throw that at you, Mike. Mike Moncla, of course, working in the oil and gas industry and numerous experiences in that major field, from Key Energy Services to several other groups, but has an extensive history of over 2 decades in the oil and gas industry trying to make it better. Mike, welcome to the show.
Thank you for having me this morning, Mike.
You got it. Well, first, give us a kind of a state of affairs, where we are today with Louisiana in the oil and gas industry, and then we're going to jump over to the future, the potential.
Okay. Well, I mean, we've got 4 different sectors that, we kind of track. And, first is North Louisiana. It's the busiest area in Louisiana with the Haynesville Shale up there. That area with the depressed natural gas prices over the last 2 years, we've actually lost about 20 rigs up there. We're down to about 18 rigs from a high at about 42. Then you got South Louisiana, which, has been struggling with even with higher commodity prices on oil. We just don't have a shale play, which is where most investment dollars are going now. So it's been a struggle in South Louisiana. And then you got the barge market, which coastal lawsuits pretty much killed that market forever. It's, used to have 30 rigs running in that market every day, and today I think there's 1. So that market's just totally dead. And then you got the offshore stuff, and which, we've had some issues with our current president, and we're hopeful that things will change under the next president. But all in all, I think with the new governor and a new president coming in, there is certainly optimism in the air.
Well, LNG, another major topic that you hear so much about, huge investment, just tens of billions of dollars along the Gulf Coast. And with that tens of billions of dollars investments, there's been some trade constraints because of the current administration, the Biden blunders, if you will. With that, the future prosperity in that space, I'm starting to get a feel that there are new projects either coming online or some that may be now back on the drawing board that could mean some exponential growth.
That's right. That was one of the wars that President Biden decided to go into with oil and gas, and that was putting that pause on new permitting of LNG. And where we are, in proximity to the Gulf of Mexico, and the pipelines, that we already have throughout our state, and more being built, and the Haynesville Shale natural gas. I mean, it's a perfect fit for Louisiana, and people have invested billions, as you just said, into our state to do just that. But those billion-dollar investments, it's you got to have some sustainability. You got to have certainty. And when you have presidents that come in and start backpedaling and retrading deals and pulling things off the table and putting in moratoriums, those investments, tend to go away. People lose confidence in the investment and pull projects from our state. So those things pretty much happen with a lot of projects got put on hold. But one of them just started sending out LNG this week. I saw the papers went out, an article in the paper went out that the Venture Global project in Plaquemine just went out. So, all of our stuff so far has been in the Cameron Calcasieu area. So we finally have one, actually going out now from the southeast part of the state. So we stand to really gain market share and continue to grow Louisiana if we can get regulations and policy in the right place.
Trump administration has said drill, baby, drill. Louisiana versus Texas, one major divide. I'll call it the Gulf. There's been some swings at it, but it's not quite in the right position. I would consider that the severance tax. Back whenever BP and all the other groups, major drillers, were looking at investment across the world, Texas got $40-some-odd billion in investment. Louisiana only got $1 billion. What would you say are the major obstacles for our state? And 2, how can we fix them? And maybe what's been fixed here in the last little session or 2?
Yeah, we really haven't fixed much in that last session. We thought we were going to get there. For me, it's a difficult proposition because everybody wants to try to fix oil because we have the highest severance tax in the nation on oil, 12.5%. And when you compare that to Texas at 4.6 and the other surrounding states, Arkansas and Mississippi, I believe they're both at 6. We're twice those states and almost 3 times Texas. So it does deter some business, but we don't have a shale play in South Louisiana to really attract the investment dollars that other states have, particularly Texas. I mean, they've got the Eagle, they've got the Permian shale play, they've got Haynesville on the west of Sabine River from us. They've got a basin south of Dallas right there. So that they've got several plays that we don't have, just the sheer size of that state, But, we have a lot of older fields that need to be reworked. So there's certainly opportunity in Louisiana if we got better pricing or, better rate on the severance tax.
Well, certainly a opportunity. And look, I guess from an industry perspective, whether you're talking about natural gas or you're talking about traditional oil, do you think there's a spot where you can fix one first and then come back and modernize later? Or is it an all or nothing scenario?
Well, that would have been great because, I would have been able to get all behind, just trying to fix oil. But the way that they always want to fix oil in our legislature is, at a revenue neutral pace, right? So what they do is they come in and they say, okay, we're going to lower oil from 12.5 down to 6, but we're going to raise natural gas from 4 to 6. So you're talking about raising the tax rate on the only real play in our state, natural gas in the Haynesville. So you're going to raise their rates 50% to try to fix oil. And, my argument has always been, why can't they both just be attractive? So here we are going to go punish natural gas, try to fix oil. So it puts me in a tight spot. And in this last special session, there was a severance bill, and we went in and we worked with the Haynesville folks and got them on board. They had to hold their nose and get on board, but they were on board. They want to be a part of the solution. The problem was the things that we changed on the bill created a fiscal note that, in my mind, I hate to say a nominal number, but it was a $56 million fiscal note. And the reason I say nominal is because Louisiana's intake on severance tax is certainly it's based on the rate that we pay, but it really is not the determining factor of how much the state gets, because it's really the commodity price. And if you look at through the years, the last 10 years, the state's intake has fluctuated an average of $120 million a year. So if it averages $120 million a year with the current rates we already have in place, what is $56 million? So if the price of natural gas or oil goes up, the state's going to get more. If it goes down, the state gets less. And that's what the fluctuations come from, the commodity price, not necessarily the rate we pay.
So is there an appetite? Now, I've always wondered this one concept around production-based reductions. Is the industry can work together well enough that if you created an incentive to lower the severance tax, we'll call it a lower lock. If you went out and said, okay, the baseline is $500 million in collections. Anything you produce over that, we're going to collect at the new rate. Everything below that stays at this rate, and then we lock in the new low as production goes up by way of rate. Has that ever been contemplated, and why would not that work? Wouldn't the industry want to get behind growing that base to lock in future decreases in the tax?
Yeah, I really haven't ever thought of it that way. I
just like it because it's an incentive. Saying, industry, you go out there, you produce more. As long as you maintain those levels, we'll keep lowering it until we finally get to this delta, this perfect utopia, and lock in that rate forever. I think it's just a stair-step approach. And speaking of I'm going to let you think about that for a couple of minutes. Folks, talking with Mike Moncla, Louisiana Oil and Gas, as we look at transforming energy markets in Louisiana. We're going to take a quick commercial break. More on the future of the Trump administration and what that means for oil and gas jobs in Louisiana. Stay tuned for that and much more. You're listening to Echols at 8. We'll be right back. Folks, we're back. You're tuned in live to Echols at 8. Remember, go to KMLB.com to listen live. I want to thank our sister and brother stations around the great state of Louisiana. KWLA 103.1 FM from the foothills of Manny and beyond. Our friends in eastern Louisiana, 104.7 The Gator. Of course, Talk 540, 105.7 FM. Our iHeartRadio affiliates, and again, those there at KMLB.com. On the line today with Mike Moncla, Louisiana Oil and Gas, as we discuss the future, the prosperity, the hope for the industry to maybe go in a different direction under President Trump. I left you pontificating a thought on a tax reset to make Louisiana more competitive. Any further thoughts on that before we jump into pro-Trump, pro-drill baby drill, and what the Prez might want to do with a national gas effort, oil and gas effort, and I think it's going to be very, very splintered as far as their approach, but I want to get your speculation on that. But the prior thing we talked about before the break, any further thoughts on tax policy?
Yeah, I'm gonna need more than a commercial break to figure that one out. But it's an interesting concept. It would be hard, I think, for DNR to maybe figure that out, but because they're normally several months behind on their severance, so it would be hard to figure it out. Like when I call to get the severance numbers for the year, they're normally a quarter back. So I don't know if that would be feasible. I mean, maybe. I need to think about that a little bit more, though.
Well, we'll work on that one. We got a couple months to get to that one, but I guess in looking with the federal government and potential changes, the leadership team that you're seeing, any key appointments by the Trump administration that gives you additional hope and optimism for maybe whether it's tax policy or just regulatory policy around what we could be doing in America, being both energy independent and actually even requiring Americans to use, Louisiana-based products or even the national products that are produced here in the United States?
Yeah, I was sorry to miss you in Monroe when I was up there a few weeks ago doing my State of the Industry. I know you had a conflict. You were back in Baton Rouge, I believe. But yeah, we're excited about Trump getting in there. Just and look, as oil and gas, we normally vote Republican, but we vote for what makes business easier. But if you look at the actual price of the commodity during Republicans versus Democrats, we actually vote Republican, which really renders lower oil prices, which is not as profitable for our business. And, for example, under Bush, the average oil price was 47. Obama got in office, it went to 76. Trump got in office, it went to 51. And Biden got in office, and it went to 80. So, for my family business and for most, service companies and even oil companies, we're voting to put Republicans in office that actually make our profitability go down. And so I like to say we're voting for what's best for the country, not what's best for us. But what is best for us is the ease of business and the taking the foot off of the throats of oil and gas on the regulation side. I mean, we've been fighting with Biden since day one, canceling the Keystone Pipeline, not doing a 5-year OCS, offshore plan, not having a lease sale for the first time in 42 years offshore. Just one after another. He's always EPA regulations. I mean, just all of that. So I believe that it'll get a lot easier to do business. I think Trump's going to come in and help on the regulation and the policy side. Now, what the price of oil does, I don't know. That is yet to be seen. I mean, if he goes in and forces OPEC to do something that would lower the price of oil, that would certainly hurt business, but at the same time take the noose off the neck. So it's I don't know. It's kind of a catch-22 there.
Well, certainly a lot to debate with that, and you got to think that as Trump uses tariffs to negotiate, he could also use production, whether it's quotas or quotas diminished from OPEC and others, and moving that to domestic markets. I've always wondered why he doesn't open up additional production in the states and require a certain percentage of that production be used for domestic consumption, thus lowering international consumptions. But that too, you got to be ready if they turn off the spigots internationally. There's a delicate balancing point that can you produce enough to take care of your own people? So that's the $1 trillion question. Can we handle our own self if we had to? And what kind of negotiating tactics would OPEC use? I know Trump's got several things in the bucket there, but I guess his industry speculated around that.
Yeah, you're right. I mean, we get a lot of stuff, a lot of oil imported because our plants are built as such for that kind of oil. Each oil has different properties from different parts of the world, and we would, we probably could get there, but it would take some big spending in these plants to get to transform them to accept our kind of oil. But it could be done. But you know how hard it is to get anything done in the United States at a plant? I mean, they haven't had a new plant built in 30 years, a new refinery built. I mean, all we're doing is doing refurbishments to plants and some minor addition type stuff. But I mean, it would be great to have a new refinery built that could handle U.S. oil. So, but EPA comes in here with the regulations, and it's just almost impossible to get anything done. Well,
hopefully, I know you're hearing this out of the Trump administration that they're working on getting rid of some of the fluff, if you will, the regulation and all the things that slow us down. And if you think about it every day, I talk to business owners every single day. I myself am a business owner, and I know what government does to slow us down from growing jobs. And hopefully between the Doziers of the world, the ones that are going to steamroll government, reform it, make it better, if you get rid of all those departments that slow you down, then all we can do is speed up, right? We're pretty damn slow as it is.
Yeah, there's no question. It would be nice to speed up. But we're, all in all, again, I'm fairly optimistic with our new governor and new president. I think it's going to be, there's positivity out there. If we can get into this next session and actually get severance fixed and get legacy fixed, I mean, it would be an absolute home run, and I think oil and gas industry would be in a whole new place to move forward, man. I'm so looking forward to it. I really hope we can get legacy done as well as the severance.
Lots of work to do. Mike, if folks want to be involved or understand more about your organization, give me some places they can go to gather more information about Louisiana Oil and Gas Association.
Our website is LOGA.LA. It is simple to get to. But, yeah, we are a membership-driven organization, and it's not just oil and gas. We've got CPA firms, insurance firms, law firms, you name it, service side and oil and gas E&P sector. So we try to represent all facets of the business: pipeline, LNG, refinery, and the upstream folks. So we appreciate any support we get.
So, and I guess my parting thoughts, we're heading into the holiday season, the Christmas season. You got big plans? You staying in state, or you gonna head out and go do something across state lines?
No, I'm blessed to have all my family in Lafayette, man. So I get to stay home and just make the trip to everyone's house and get it all taken care of. But yeah, I'll be in Lafayette.
Well, I've got meetings in your town today, so I'll be running around you in circles. Speaking of circles, the oil and gas industry, do they take off for Christmas, or do they keep on pumping?
No, man, we keep running. We keep running. Those we used to have 20 rigs at work 24 hours, 365, and we'd always send turkeys to the rigs and send them food, and they'll be on for Christmas, but they'll be off for the first, or they normally work 7 and 7. So, but yeah, it's we're 24/7 business for sure.
Well, I appreciate your industry. Keep on pumping and keeping Louisiana moving forward. We'll work on some tax policy in the upcoming tax session. Remember, folks, you can go to loga.la for more information on Mike's organization, Louisiana Oil and Gas Association. Mike, Merry Christmas, buddy.
You too. See you soon.